All right, welcome everybody to the webinar today. Excited to be here. Thank you for anybody joining on and anybody who watches after this or the recording. Super thankful for anybody who wants to jump on and give some information. The point of being here is to educate. I want to put a bunch of content out there for people to resource for themselves, to look up their own information. If you're somebody who likes to do their own self-study, that's who I relate to. That's how I got into this business, is because I wanted to handle my own portfolio and to make sure I was doing things the right way and the way that I wanted to for my family. And so it's big. My name is Corey Proctor. I want to give you an introduction. Today, we're going to be talking about long-term care and protection strategies as part of a series. And we'll go ahead and I'm going to give you some items of interest into this. But what I'm going to do is give you a background story of why I'm in the business, why I'm doing a webinar on long-term care. I want to let you know that I do webinars on the first Thursday every month. And yesterday we did it. I'm doing a re-recording of this, but yesterday we did it on a Wednesday just for scheduling purposes. But usually it's the first Thursday of every month. You can go to the events tab at procapitaltx.com to see when the next event is. December 16th, we're going to have an open house here at the office. You can see the address here in a second, but we'll have an open house from 3 to 7 p.m. Moved to a new office this year, so we'd love to have you come by, look, clients, prospects, anybody in the neighborhood. We're in an office park here, so we're going to be inviting everybody around, but wanted to extend that out. We're going to have some drinks, some wine and some champagne and some sodas, and come by, have a drink and some snacks and some Christmas music on us. Maybe even do a little drawing. Who knows? You might get a Christmas gift. So we got the office decorated and it's looking good right now. But December 16th, put that on your calendar. Open door to come and stop by, see the place, and have a drink on us. And so we'd love for you to come by on that. February, planning an economist to come out. I get a ton of information from wholesalers, from different people that I talk to. I'm a huge reader. I love consuming a ton of different information. I love listening to webinars myself and searching out a lot of different information. So anyways, I have different economists that I talk to or that I deal with that are huge banks of information. And so I'm trying to schedule that for February right now, so they can come out and we can speak to clients and other people in our community to talk about the outlook of the market. And so these are a lot of sources of my own information. And so they're people that have been in the business for a long time and done some amazing things. And so come on out or watch out for the alerts that come out for that for February. All right. So put that on your in your lockbox. A little bit of background about myself. I started this company, Pro Capital Wealth Management, totally not intending to get into the financial business, but growing up, come from a split family. Both parents were remarried, lots of step siblings. So know what that situation looks like for a lot of families and how the emotions are in navigating that. But when I was in high school, I ended up getting into a car wreck and rear-ending a lady, and ended up being a bad deal because she filed lawsuit against my mom and my stepdad, and which caused a big financial hardship and didn't help our situation at all. And so ended up having to move and having to do a lot of different things. It was a tough deal. So that was a big deal. So anyways, when I came into the NFL, I played 6 years in the NFL, mostly here with the Cowboys. Some of you guys can see my jersey on the back wall here. So when I came in the NFL, I was super frugal. I spent like nothing basically. And so I remember my brother coming over to my apartment and I had water and a ketchup, I think, in my fridge. And he was like, man, you play in the NFL and this is what you have going on in the house. So it was, I tell you what, everybody down MacArthur Boulevard here in Irving, Texas, in every restaurant knew who I was because I was there for every meal basically. And so anyways, I was super frugal coming to the league and I got to see all these situations. I had one friend, bad situations with money, but I had one friend who lost 12 million in a restaurant deal. And then when I got out of the league, we had ended up going through a horrible experience, losing somebody we love, And I remember sharing with those people who are close. I don't want to share full details of that, but I remember talking with them and asking what their financial situation, because my family and I were prepared to offer assistance if we needed to, and prepared to drain the bank if we had to. And so some of those situations in life, basically sometimes you have no choice but to drain the bank or to help in some of those situations. And so that's what I kind of learned. A big lesson that I brought out of those types of experiences in my life was that money gives you choices. It's a security blanket. And if I can preserve the choices for myself and my family to make sure that we're taken care of, I might have been able to lose it at 20 and went and made it all back. But at 40 years old, I don't really care to do that, especially with a wife and 2 kids. So what was born from that was Pro Capital. And I've kind of built my mantra for the company. Our mantra is basically, we want to put a lockbox around somebody's life and assets to make sure it's not subject against major market devaluation and judgment in lawsuit. And so we work too hard for our life savings. We love seeing our money grow, but we work too hard to see it just get wiped away. And I would say our focus is on risk management, which is one reason why long-term care is a conversation today. But our first place we start is risk management. And the thing is most money managers go straight at the money. They start and end there. And the problem with that is it creates blind spots. And the fact of the matter, if there was an event that could come wipe it all away, like what happened with my family, and you had to start at ground zero, it's just a number. And it really doesn't matter how good your asset manager is at that time. It's not helping you at that moment. So we start with risk management, and then we work around the horn before we ever touch the money. And we want to make sure we're taking care of somebody's life so they don't have any of those potential events subject to them. That's our goal. And so anyways, we started this, and it ended up becoming an awesome place and have a lot of great clients. But we'll go ahead and jump right into it. Long-term care is the issue. Why is this an issue? Personally, I've seen this happen with multiple grandparents. I've had parents that have gone into assisted living facilities, and one of my grandmas, the average need for long-term care is about 3 years, and she had dementia for 12 and had to live in an assisted living facility. Well, the problem with that is if you're paying 10 grand a month or more in a facility like that, it's really easy to drain the bank when it comes to your assets and any potential legacy you want to leave your kids. And so you run the risk of running out of money in a really big way. And so it affected them. I saw them go through that, and I don't want that for other people. So it's become personal to me. We've had some of these conversations and why I'm having these conversations. So why is this an issue in America or in our country right now? Well, we have 10,000 baby boomers a day turning 65, a trend that's going to keep going until 2030. That's 1 in 11 seconds. And it's going to keep going that way. And so right now we have about 3.5 working age Americans for every individual retirement age person. And then by 2060, there's going to be only 2.5 working age Americans for every individual retirement age. And when you think about that in retrospect or comparison to previous years, for what we've been paying into Social Security and Medicare, we used to be at double-digit numbers, 12 or 13 people for every person that was drawing on Social Security or Medicare. 12 or 13 people were paying into the program. So we had a ton of support going in. And so now, on top of poor management from our government, I don't know your opinion on that, but that's just mine. But on top of poor money management from our government, we have a bigger strain on the system because more people are retiring every single day. More people are deciding to draw on our programs. And on top of it, the biggest issue specifically to long-term care is our healthcare has gotten way better. So people are living longer. And so people are lasting because they're living longer. They're having to account for more years of expenses. And when more years of expenses, we're living longer, we have more healthcare issues, more medication, potential living arrangement situations, and all that comes at a cost. And so we have to figure out how to deal with that. And because people are living longer, they're outlasting their assets. And this becomes a huge issue. And so what's my odds of needing care? In general, almost 70% of people in America are expected to need long-term care services at some point during their lives. This is from the Department of Human and Health and Human Services. So it's tough because 70% might need long-term care. The average need is about 3, and that's about 3.7 years for women and 2.2 years for men, and together that's about 3 years of need for the average person that goes into long-term care. And so and then on top of that, about 20% is going to need it for 5 years or more. And so that why is that a big deal? Well, because there's a lot of costs associated. So what I want to do is, what it's doing is putting a whole big strain on people's lives and their need for healthcare, because they're living longer. There's newer issues that are coming out. We're still trying to figure out some things, but people in general are living a whole lot longer than we used to. And so we got to provide for ailments in older age or issues that might be arising somehow. And so what I want to look at today, what is long-term care? How much does it cost? And what are my options? Okay. What is it exactly? Exactly. So we can look at these pieces right here. Go back to my notes. But with long-term care, it has a few different things. We talk about nursing care such as rehab after we get out of an extended hospital stay. You break a leg or something happens there and we still need rehab after that. That might be a piece of long-term care. Assisted living facility. Some of you guys might have had a parent or grandparent go live in a home, a senior living home like I have. And these are environments where people can't function independently, but they don't necessarily need daily care. So you guys might have heard of the daily living activity. So these facilities offer occasional help with somebody who needs help in that area of daily living activities. And that might be bathing, dressing, eating, transferring, getting in and out of bed or a wheelchair, or walking in some respect. There's home health care. That might be help with activities of our daily living activities, but that might be also with meals or budgeting or house cleaning, medication management, and even transportation. These are usually from hired assistants that come into the home on a regular basis. So that's a big. And the last one here might be respite care. And a lot of people or families might, in order to help curb the cost of any healthcare, they might be coming to help themselves, right? You might feel a moral obligation to come help in that situation. So, but that can become pretty exhausting and another job in of itself. And so respite care offers occasional break for the family members who are providing the long-term care services. So that's some examples of what it is. How much does it cost? Well, the national average right now for assisted living for somebody to come to your house is about $48,000 a year on national average. Nursing home to go into a facility is just over $100,000 a year. That's a lot. And you see here, we have on the high side is California, assisted living 54,000, nursing home 117 or almost 118,000. New York is even more than that in the nursing home, 146,000. Then we have the lower end in Utah and Missouri, 34 to 40 grand for assisted living, and the nursing home from as low as 66 in Missouri. So if you think that's really going to be a problem, maybe a move to Missouri might help spread that cost around a little bit. But you can see as we start pointing this together, if we have a national average of 70% of people are going to need long-term care. We have an average of about 3 years of that need should somebody go into that. And let's just say they have to go into a nursing home and the average is just over 100,000. Well, the question you got to start asking yourself as we go through these conversations is, do I have an extra 300 grand in my assets or in my savings that I can pay for myself to go into long-term care situation or go into a healthcare situation to cover those costs, or do my parents or do my grandparents? Am I going to have to take care of them at some point? Do they have the extra costs associated, or do my siblings, do my brother and sister, somebody do I care about, do they have the extra costs? Should that ever become an issue? And when you're talking about the odds of being 70% of the population, there is a high chance or likelihood that somebody's going to live long enough to see some degree of, or have some degree of need for long-term care. And so there's costs associated with that. And so that's a big deal. So what are our options? Well, long-term care kind of falls under the bucket in our area of risk management. And so when I'm talking about risk management, we have really two choices. We want to identify those risks. We want to quantify those risks. And then when we look at those, we have two choices we make. We can transfer it in the form of a legal document, or maybe an insurance contract with a carrier, and try to transfer that risk to some degree, or we can assume that risk, and we can try to self-manage our health. We can eat well, exercise, practice a healthy life to try to reduce our chances of ever needing that type of care, and basically pray that we don't have to go through that. So those are our two major options. So we can go into that, but let's look at both. Self-insuring, obviously the pros on that, it gives us complete flexibility. Right? We can do whatever we want, when we want. A lot of the people that I talk about when we're talking about long-term care insurance is, man, they look at the costs associated and they're like, man, I can put that in my brokerage account, or I can go on vacations, or I can do something else with that money that I really want to. And the answer is always you're right. It gives us complete flexibility. But if that's the case, the route somebody wants to go, they need to be prepared for that potential expense, because it could be significant, right? And so most people actually choose this by default because they don't plan at any level. And so the problem with that you got to be ready for is I can't buy fire insurance on my house that might be on fire. And a company's just not going to insure me if my house is already on fire and I call them up and say, hey, yeah, I know it's burning right now, but I need insurance to cover the damage, after this thing is put out. And they're going to be like, well, sorry, no, this is in case, insurance is in case this happens, not when it's happening. That's not what we're going to do. We're not going to be on the hook for that right away. And so the same thing as long-term care. When you're in the midst of those expenses, you're not going to be able to get insurance. And so you just need to be prepared for that. If you choose to self-insure, you might not ever need it. You might be in that category of the 30% who might not need it at all. But I will tell you, my grandma, who was in the home for 12 years with dementia, was perfectly healthy. She was not overweight. She was not obese, wasn't a smoker. She didn't have any extreme history of health issues. It was just something that happened, and you don't know who that's going to happen to or when it's going to happen to. But sometimes those cognitive declines come in a big way too, and the need all of a sudden is there. And so when we're preparing to self-insure, we just have to be prepared that we have to take on that full cost. And so it's great flexibility, but we got to be willing to take that on. I want to give you an example of somebody. What were to happen if we were to self-insure? How would that look out? Well, we have two lines here. One, I want you to look at this top line. And so what I'm doing here is we're given a hypothetical situation here. Person has $1 million. They're making an annual 5% return on their portfolio, and they're taking that 5% as income. So 50 grand a year. And we're going to account for 3% inflation. When normally would they run out of money? You see this draw down at 92 years old. This is assuming that neither spouse would need any sort of long-term care in that timeline. That's a normal projection, a drawdown of assets as somebody's spending in decumulation mode after they've chosen to cross that veil. So $1 million in assets, no other income coming in, 50,000. That's when that money would run out, is at 92 years old. Now, the second line is if one spouse had to spend 5 years at the beginning of retirement from ages 65 to 69 for the only 5 years, right? So at 20% mark, but only 5 years, if they had spent in long-term care or had a need of some sort, and we put that need at 67,000. Now remember, the average assisted living was 48. The average nursing home was over 100. So we're kind of going on the lower end here, but that would put our total adjusted income at 117,000 was the need from that million. And so you'll see just in that 5 years, the dramatic drop it has, and we take off, let's assuming we don't need it anymore after that 5 years. If we only need it for that 5 years, it shows money running out at 83. Now you could think, for example, if all of a sudden your second spouse had to go into long-term care, or maybe you had to go into a nursing home and it had to be $100,000. This would be much more of a drastic decline, and you could see how it could devastate somebody's retirement or assets later on in the years. And so it could really, really drain somebody down in a big way. And somebody might say, well, what about Medicare? Medicare is going to help us out, right? Sort of. They kind of help. Medicare covers only a partial solution in long-term care. It does cover some skilled nursing home care under very tight restrictions. They have big regulations for that. And then you have to stay in a hospital for 3 days first, then be discharged directly to a skilled nursing facility. But it doesn't pay for any custodial care. And so, and you'll see on the screen here, it covers the first 1 to 20 days, first 20 days completely. Then you're responsible for a co-payment of days 21 to 100. And then if you're in a facility for over that 100 days, they don't help at all. It's 100% falls on your shoulders, and you have to make that. And so what happens is Medicare is an issue, and that's assuming that the facility that you might potentially use or the company that you use for that care service accepts Medicare. So the issue with, Medicare can help, but it's super limited in choice. And you might be trying to interview some of these homes or services to help out with. You might not like the nurses. You might not like the facility. You might not like it at all. You might not like the level of care that they give or the facilities that they use, or even the cleanliness of it. And the thing is, if the one that you want to go to or the people that you want to use don't accept Medicare just kind of goes out the window right there. So it's super limited in choice, but I want you to know it's available, but it's not the greatest thing. All right, what are our options? Well, the biggest option you can look at is long-term care insurance, right? And I know all of us love to have this conversation, not more insurance, but it's a way to curb the cost. And so what long-term care insurance can do, it covers anything that you need: skilled care, custodial care, in-home assistance. It does a lot, and a lot of people find it as a little more of an appropriate way to protect themselves and their loved ones from potentially devastating costs of long-term care if they run to an extreme cost and ruining their portfolio. And so there's pros and cons to everything. The major pros and the goal of long-term care, especially for us in wealth management, and what we're trying to do in the risk management section, is protect the assets. We want the retirement funds not to be depleted. We don't want your life savings to be depleted at all. You don't want to run out of money because you have plans to go on vacation. You have plans, a certain standard of living that you want to stick to. You might have a legacy you want to leave to your kids or some other beneficiary. We don't want those choices to be run out the door just because of an unexpected cost that might be associated with your healthcare. A pro is potential tax benefits. Some or all of your premium that you pay towards a long-term care package or insurance contract can be deductible. So that's nice. Probably the biggest pro, honestly, is what the money touches. And that's honestly, that preserves the dignity. I love to preserve somebody's assets all day long, but really what you're preserving there is somebody's standard of living, their independence, their choices. I told you why the lesson that I learned early on: money gives you choices. And if I can preserve that for somebody, especially my family, right, I want that. So if I can preserve that for you, that's a big deal. And so what I end up, when you're really preserving the assets and keeping a situation or a threat like long-term care costs eat at somebody's life savings, you're really preserving the dignity in their life, because you're allowing them to keep, you're accounting for something that's not going to threaten their livelihood or threaten their life work. Okay. And so that's a big one. And so the biggest issue a lot of people have there is, man, I don't want to run out of money, and I don't want to be a burden on my family. I don't want my kids to have to take care of me. I don't want my family members to have to pay for me. I just don't want that. And so that's the biggest preservation that you could keep on that, with the pro of having some long-term care insurance. The cons, obviously the cost of premiums. Nobody wants to pay more insurance on anything. I swear we pay enough, but that's the biggest con. Obviously, we got to be comfortable with the costs associated to that. And then the complexity. There's a wide range of benefits and premiums and different types of plans, and we got to know what we're looking at. So I want to give you guys some pieces to think about when you're looking at a long-term care policy. Okay, when we're choosing this, what do we want to bear in mind? All right, first, I want to make sure you understand the limitations and features of the policy you're considering. In most cases, policyholders can't collect benefits until their disability reaches certain levels. And most policies specify how much they'll pay for each day of care and for how long. So this is a big deal, because I've heard stories where they're like, well, I wasn't really impressed with what long-term care covered, or I hated having to go back and report back to them constantly. And so knowing how that's going to walk out in the event that you need to use it and exercise that benefit, you want to know what that's going to look like exactly. So you got to understand the limitations and the features of that policy. Second, take a close look at the type of care covered. All right, long-term care policies can cover everything from skilled care, nursing home, periodic custodial care in your home. And you need to understand exactly what's covered and what's not in that. Are those pieces part of it, or is it part, all, or none? Third, look at the total benefit. You don't want a policy that it's going to run out of benefit just when you need it most, right? Just when it ramps up. And you don't want to pay for coverage you're unlikely to need. So make sure you look at the total benefit of that. Look at the waiting period before benefits are scheduled to begin. It could be a 30, 60, 90-day waiting period potentially before benefits are scheduled to be paid out. You want a policy that's renewable. Consider inflation protection. The cost of healthcare goes up way faster than the general rate of inflation. So it doesn't help to have a policy that's going to fall behind in rising healthcare costs. And then lastly, look, you might consider a policy with waiver of premium. It means that your premiums are discontinued once you start drawing benefits. And so you don't want to have to be paying more premiums when you finally need to use that benefit that you've been paying for. And so that's a big one right there. That's kind of, that's the end. I just wanted to give you guys some quick pieces. We're at 30 minutes exactly. So I wanted to keep it short and sweet for you. What I will say is if you have questions, comments, if you have anything, would love to have a conversation, would love to help. When you come into Pro Capital, when you come into our office, what you're having is a conversation with me. I don't need to have any documentation. I don't need to know anything else. Now, we do have qualifying features. We have a level of client that we work with. And so we would need to know a couple pieces of information when you call in order to come in and have a meeting. But overall, I don't need any other information when you come into the door. So we're basically coming in for a visit, a cup of coffee, a brainstorming session to see what's going on with your life and if Pro Capital can help in some respect. But if you got something, go to the website, procapitaltx.com. Tons of resources and information on there that you can exhaust, that's constantly renewed every day. So you'll see a bunch of stuff. You can subscribe to our newsletters and information, that emails that go out on there, or you can shoot me a message and set up a time to talk. So give us a call. Thank you guys for watching. Thank you for taking the time. If you're watching the recording of this, thank you for that. Appreciate the time, and we'll talk to you guys later. All right, bye.